Okay, more budget reactions then, and we had with us earlier Rahul Chadda, the Co-CIO of Mirae Asset Global, and he believes that the budget policies are positive from a medium-term perspective. However, that super rich tax is definitely a negative for India, according to him. Listen in.
So if you look at the budget and if you look at what government laid out in economic survey, I mean, a couple of clear positives that the big issue with India has been the high cost of capital. So government's committed to reduce that. That happens through encouraging FDI by kind of getting more portfolio flows also. Some of the government borrowing done outside means you have less of a crowding out effect in the local bond market. So all these are positive from a medium term perspective. From a near term, obviously, there is a slowdown in the economy, and with government not giving any kind of consumption handouts, which are good from a medium term, the slowdown gets a bit more pronounced. So I think the way it plays out is markets may be lackluster. Some of these consumption names which have done well for last 5-7 years would take a breather, go through a bit of a price and a time correction. Whereas as government's investment spends pick up, as the big boost comes on the housing front, I think we should see the investment cycle revive. If you ask me the negative in the budget, what kind of left a lot of bitterness was the increase in taxation for people earning above 2 CR or 5 CR. I think the rich have an option, and we saw in Korea, the Korean government made this mistake 2 years back. They went towards the socialist way, increased minimum wages, and the private investment just went on a hold. And now, after going through a pain of 2 years, the government's reversing everything. So you don't want government to make that same mistake in India, that learn it the hard way over 2 years. So I think this was something which was negative from the budget.
Okay, interesting news on your screens. ITC chairman says looking to acquire companies in the FMCG space. ITC, that is. And do remember that we have been talking about how ITC wants to actually trim down its exposure to cigarettes, which is subject to a lot of vagaries, especially on the taxation point of view. And now it has been trying to increase its exposure on the FMCG side of the business. Though, of course, mind you, it's not that margin accretive compared to the cigarettes business. The EBIT is still struggling to cope up. It's still struggling to really, increase on a quarter-on-quarter basis. Nevertheless, this has been something that has been on ITC's mind to reduce its exposure to the cigarettes business and increase it in other FMCG companies. Decent growth as well. I mean, what we've been seeing for the last few quarters is that the other FMCG business has been able to maintain its double-digit growth in the teens or just early teens or early double digits, so not bad at all. And now it wants to, of course, look at an inorganic method as well of growing this by acquiring companies in the FMCG space. So continuing with its commitment to reduce exposure to cigarettes, the fact that it has that sin associated with it as well is something that's high on ITC's radar. Stock not doing much at this point of time. Quick break right here on this show. We will be talking about more movers and shakers when we return.